I think the Wall Street Journal is probably the best newspaper on the planet. It's not just because they're part of our sister company, corporate ownership, et cetera. They just come out with thoughtful, constructive, non-crazy pieces. And this one really caught my attention today, that the midterms are a boon for stocks no matter who wins. I want to explore that a little bit with the Wall Street Journal's top editor, also the best-selling author of Borrowed Time, James Freeman. James, explain that, because that surprised me. I always thought it would be a problematic time.
Neil, thank you. This is the greatest show ever created. You are the most brilliant host. I think
there we go.
Not just in the history of broadcasting, but of civilization itself.
Thank you very much. I always say that, yes.
I think you look at the history. October, normally, it's had some disasters, but the midterm election years tend to be pretty good. When people think of October for stocks, they think of 1929, 1987, a lot of bad times. But this actually is often a good year, especially in midterm years. And I think the question now is, you look at the achievements of the last couple of years, the tax cut, deregulation, I think barring a rollback of those things, it should be.
That's what I loved about the piece. It was looked only through the prism of money, only through the prism of the markets, so it kept a lot of this other nonsense out. But one of the things that interested me in the whole argument was whether in this particular case the market run-up is already reflected, and it could be undone by what happens in a month.
So obviously the market sees very good earnings. We're expecting, and so far this earnings season they have been very good.
And this one's supposed to be very good.
Right. So, there are a certain level of expectations into the market, but as we've seen, the expectations are still rising, and you've been chronicling the changes in interest rates. That is an expression of investors thinking, maybe this isn't a one-quarter wonder, short-term sugar high. And I think as that it's still the consensus that this is a short-term high from tax cutting. And I think the White House and others, and I believe once you lower the corporate income tax rate, you get long-term investment and you have room to run there. So I think there's still room, long answer to say, there's still room for people to raise their long-term expectations.
Even if Republicans, and this is not a political comment, but they are more friendly to Wall Street, or Wall Street is deemed to be more in their hip pocket than the other way around, even if in this case Republicans were to lose the House?
It's certainly not good for markets, although the Wall Street specifically, I wouldn't say necessarily Republicans are more friendly. This is a highly regulated industry. It has been for a long time.
And by the way, they've done very good under Democratic presidents.
Often, so, yes.
Absolutely.
And look, Goldman Sachs, Lloyd Blankfein, various people, he's retiring now, but have said, look, these regulations are a barrier to entry for smaller competitors. Not all regulation is bad for the big firms.
Real quick way here, my friend, your great book on Borrowed Time and looking at Citigroup and banks in general and how we took care of them. Bernie Sanders along saying we still have too big to fail. I still want to break up a lot of these institutions, all the big names you hear about all the time, because he says it'll happen again if we don't.
Yeah, I think he's the worst messenger for this. I think there is still a too big to fail problem. It has to be addressed. But what we want is a consensus that we got to get the crony out of capitalism. He wants to get the capitalism out. And I don't think...
Well, he wants to take away their devil-may-care risk-taking, right, which he says we didn't do, but we should have done.
Yeah, he's coming at it from a hostility to Wall Street in general. So he has said that the business model of Wall Street is fraud. He's not trying to give us a better, less government-supported, free financial market where people can succeed and fail. He's trying to replace that with something much worse. So I think I suppose as you're trying to build the coalition, maybe you want him in it, but I don't think he's the answer if you're saying, how do we go to a freer market where the big firms are free to fail as well as succeed?
All right. Well put. James, thank you very much. The Wall Street Journal editorial page assistant editor, Borrowed Time author here.